Good morning, and welcome to Kenny and Sam's 30-minute construction risk series. Today's edition focuses on understanding key insurance provisions. My name is Chris Kenny, and I'll be presenting today with my partner, Nate Cole. And Nate's going to give you some information about this series of client service programming we provide.
Good morning, Chris. Thank you. So this is, I think, number 5 in a series of these presentations that we've been providing for our clients and for all of you out there that are watching. It's a 30-minute overview, so we're going to do a general assessment of some of these key provisions that we see in insurance policy, specifically the commercial general liability policy. We are also offering these presentations for folks that have questions about employment issues. And so please join us next month, which we'll be diving into some employment issues. These presentations run on the third Thursday of the month, starting at 7:30. If you're not able to watch it live, you can access it on the YouTube channel. You can see some of the prior videos, and you can also reach out to us directly with any questions you may have.
So as you are all involved in the construction industry, you are intimately aware of risk management and risk transfer necessities. We're going to talk today about risk transfer mechanisms so that you can understand them and apply them in your business. There are really 3 main ones I want to discuss with you to kick off today: liability insurance, contractual indemnification, and additional insured coverage on someone else's insurance policy. Let's start with liability insurance. Most contractors carry what's called commercial general liability insurance to cover their construction operations. This protects them from lawsuits arising from construction projects. And it has 2 parts. The CGL policy has a defense obligation and an indemnity obligation. That means that the insurance carrier must defend you against a lawsuit that alleges damages that fall within the policy. This is lawsuit insurance. It means they'll pay your legal fees and your legal costs so that you can be defended against a claim, even if it's frivolous. As long as it alleges negligence that falls within the coverage of the policy, they've got to provide you with a defense. Importantly, this defense obligation is what's called supplementary coverage. In other words, it doesn't affect the policy limit, so that the defense obligation doesn't drain down the policy limit you later have for indemnity. Indemnity is the second part of the CGL policy coverage. This is the money that's available to settle the case if you're at mediation or it resolves before trial, or to pay the judgment if you go through trial and are hit with a judgment against you. There are 2 parts to this limit. The policy will have a per occurrence limit and an aggregate limit. What that means is a per occurrence limit is for that particular occurrence, that particular action that led to a lawsuit, usually an accident of some kind. So let's say that the policy says we have limits of $1 million per occurrence, $2 million in the aggregate. That means for that any one particular lawsuit occurrence, you have up to $1 million to settle it or pay damages that are in part of the judgment. But in that same policy year, you only have a total of $2 million. So if in 2022 you were sued 3 times, the first case settles for $1 million, the per occurrence limit. The second case settles for $1 million, the per occurrence limit. You would then have exhausted the aggregate limit of $2 million. If there's a third lawsuit, you're out of luck. So pay attention to these limits. Now, the scope of coverage under the commercial general liability policy is important for you to focus on to make sure that you know what's covered and what's not. Generally speaking, the CGL policy covers claims by third parties seeking damages for property damage, bodily injury, or personal injury allegedly caused by the contractor's negligence. So it's important to break that down. Again, it covers claims by third parties. So it doesn't cover claims by your own employees. They're not third parties. Claims by your employees would be covered by workers' compensation insurance. Likewise, it doesn't cover things like design liability. A contractor is not an architect, not an engineer, should not be engaged in design. And if it's a design build job, there should be a separate policy that covers the design risk. The CGL policy will exclude it. So to help you understand the basics of the CGL policy, there are really 3 parts. First, the grant of coverage. Second, exclusions from coverage. And third, exceptions to the exclusions. I just told you what the grant of coverage is under the CGL policy. Again, it protects the contractor from claims by third parties alleging damages for bodily injury, personal injury, or property damage. The exclusions from coverage are what this policy doesn't cover. Generally, for example, it'll tell you that it doesn't cover a claim arising out of an automobile because there's a separate insurance policy for that, auto insurance policy. It doesn't cover, as I said, design liability. Those are, sort of general examples. Nate's going to give you some specific construction industry examples of exclusions that you really have to focus on in just a moment. But I told you there are three parts to this: is the grant of coverage, the exclusions, and then the exceptions to the exclusions. So whenever you make a claim for coverage on your policy, if you get a denial letter from the insurer based on an exclusion, be sure to check with counsel and your insurance agent to see if there's an exception to that exclusion. Now, making claims on your own insurance policy affects what's called your experience modification. The more times you get sued, the more money they pay, the higher your premium is going to go. So this takes me to my next point of risk transfer. It's always better to get on someone else's dime if you can do it. And one of the ways to do that is through contractual indemnification. Now, this is a right that exists in the construction contract. Think about the typical case, the food chain with an owner, a general contractor, and a subcontractor. In this hypothetical case, an employee of the subcontractor gets gets hurt, and that employee brings a lawsuit. The employee can't sue the subcontractor because that's his employer, and the employer provided workers' comp, so the sub is immune from a lawsuit. Therefore, in the typical case, that employee will go around the subcontractor and sue the general contractor for damages, for failing to make frequent and regular inspections and failing to make the job site generally safe in accordance with OSHA obligations. What does the general contractor do in this instance? They're going to look to the subcontract they have with the plaintiff's employer, and they're going to try to invoke the contractual indemnification claim that's in the policy, that's in the subcontract itself. And this is the food chain I told you about. Is all of this usually flows downhill from the owner to the general contractor to the subcontractor. So in Massachusetts, there are some statutory protections for subcontractors. Specifically, General Laws Chapter 149, Section 29C says that any indemnification obligation that purports to require a construction subcontractor to indemnify a general or an owner or anyone else for liability not caused by that subcontractor is void as against public policy. So, practice pointer for subcontractors. If you're hit with an indemnification claim, look at the language in the subcontract that the general or owner is relying upon. There's a two-pronged attack you can make on it. First, look at the indemnification provision as written. If as written, it is too broad, in essence, it says subcontractor will indemnify general for any liability on the project, that's void. Again, 149.29C requires that the general show that the liability arose out of something that was caused by the subcontractor. If as written, it purports to be broader, then it's void before you even get to the facts of the accident. So look at it as written. And then if it's okay as written, still look at it as applied. If under the facts of the accident, this liability did not arise, was not caused by the subcontractor, then likewise the indemnity doesn't apply. Now, a practice pointer for general contractors or owners when they're seeking indemnification, if you hear that pushback from subcontractors about this provision being invalid under 149.29C, check to see if you have savings language in the indemnity provision. Savings language is typically an introductory clause in the indemnity obligation that says, to the fullest extent permitted by law, comma, subcontractor will indemnify general and owner. That introductory clause will save an otherwise invalid indemnification provision, and as generals, you should always make sure that that's in there. Now, the indemnification obligation against a subcontractor is only as good as the subcontractor's assets. You can't get blood from a stone after all. So it's important to see if the assets are insufficient to cover the indemnity obligation. Does the sub have an insurance policy that might cover the indemnification provision? So if you're a general or owner looking for indemnification, get a copy of the sub's general liability insurance policy. You'll see that there'll be an exclusion for liability the sub assumed by contract. But then there's an exception to that exclusion for what's called an insured contract. And when you look at the definition of insured contract, it says essentially a written indemnification agreement. So what that might do for you is allow you to prosecute the indemnification claim against the subcontractor, knowing that if the subcontractor lacks assets to pay the indemnity obligation, its insurer might have to step up if the indemnity obligation is deemed to be an insured contract. And last, I want to take to you what is really the best protection for a general contractor or an owner, and that is to be an additional insured on the subcontractor's general liability insurance policy. This is different from indemnification, and it is not regulated by that special anti-indemnity statute I told you about. 149.29C does not apply to an additional insured right that a general has on a sub's CGL policy. So how does one get this right? When you're negotiating the subcontract, after insisting that there be an indemnification obligation, in a separate provision in the subcontract, require the subcontractor to list you as an additional insured on the subcontractor's commercial general liability insurance policy. Make sure that you add the language primary and non-contributing. What that means is if the general gets sued, they can tender the lawsuit not just to their insurer, but better yet to the subcontractor's insurer. And the subcontractor's insurance policy will be primary, meaning its full limit must be exhausted before one penny comes off the general's policy. That's the non-contributing part I told you about. So again, you want that language that the additional insured status on the subcontractor's insurance policy will be on a primary and non-contributing basis. As the saying goes, trust but verify. So don't simply rely on a certificate of insurance that you get from the subcontractor indicating that you're covered on the subcontractor's policy. These insurance certificates are normally accord forms. If you look in the upper right-hand corner, it'll have a disclaimer that says this certificate confers no rights on the certificate holder, the general contractor. It's informational only. What you want to get, if you're the general or the owner or the party that says you're an additional insured, get the actual endorsement from the subcontractor's CGL policy to make sure that you are in fact an additional insured on the policy. Then compare the language of that additional insured endorsement to your subcontract requirement to make sure that what you said the subcontractor had to get for you is what in fact the subcontractor got for you through its own insurer. And now I want to turn it over to Nate to talk about some construction specific exclusions to CGL coverage.
Thanks, Chris. So Chris said trust and verify. I'll add trust, verify, and review. So I want to talk a little bit about what your obligations are as an insured, as a policyholder in Massachusetts. In Massachusetts, there's at least one case that stands to the proposition that as a commercial insured, as opposed to a mom and pop or just a homeowner, you do have a duty to review your insurance policies. So I think it's good practice, first of all, but moreover, you have an obligation legally to look at these policies. Now, we're going to assume that most of you are not insurance experts, attorneys, or insurance agents. Notwithstanding that, it's great practice to get a hold of that policy. Chris mentioned some specific endorsements, and you want to be reviewing it for key language and things that are going to jump out at you. I want to go over some of the exclusions that you want to be looking for. What I'm going to discuss, it's not an exhaustive list, but it's exclusions that we're seeing somewhat frequently in litigation that our contractor clients, but businesses generally want to be aware of. Commercial general liability policy, by its name, general, it implies somewhat that it provides broad coverage. It does, but it doesn't cover everything. When you get your policy, you want to start with the declarations page. That's that summary page. And at the bottom of it, it may reference endorsements, either by endorsement number or a code. You want to make sure that when you have that policy that's been issued to you by the carrier, that you ask your agent or you ask the carrier that you have all those documents, including those endorsements that are referenced down at the bottom. Because while what Chris talked about, sort of what the policy provides or giveth, these exclusions that I'll talk about and the other exclusions that are part of the policy, they taketh away. Exclusions that you should be looking for, they can change the policy based on a whole host of things. They can change the policy based on geographic areas where you're doing the work. Policies can be limited based on specific types of projects. So depending on the type of trade that you're involved with, you need to be looking for exclusions that may limit or in any way modify the policy based on the type of work that you're performing. And they also then modify the policy or exclude certain acts by individuals. It's great practice to have a relationship that you're developing with insurance agents. In particular, if you're in the construction field, you want to make sure that the insurance agent that you're working with is familiar, an expert in coverage and issuing policies for contractors. They're going to be aware of the type of endorsements they should be. And when you develop the kind of relationship that we want to see our clients develop with their insurance agents, then you're going to be able to ask them questions. They're going to be looking out for you. But there's no substitute for you reviewing that policy on your own, and then I think with the agent. So when you get the policy in, take a look, go through, and ask questions. As Chris mentioned, generally CGL policies are providing coverage for bodily injury or property damage that your work causes to others. So you injure someone else other than an employee, or you cause property damage to someone else's property. A CGL policy, it's not an all-risk policy. It's not, in effect, a performance bond. It's not there to protect business owners from every risk that they may encounter. It's not there to provide coverage for poor workmanship or for breaches of contract. So if you've done a bad job on the work that you've been hired by an owner or by a GC to perform, and a claim gets brought against you either by the owner or the GC for defective work or poor workmanship, that's not what a CGL is going to provide coverage for. Where it's going to step in is when someone else is injured or when your work causes property damage to someone else's property. There's some exceptions to that I'll get into in a minute. But one of the bigger exclusions that you should be aware of and you want to be looking for, and this is fairly typical in CGL policies, is the your work exclusion. And what they often read, although the language can be different policy to policy, but you'll see something like this. This insurance does not apply to property damage to work performed by or on behalf of the named insured, you, arising out of the work or any portion thereof, or out of materials, parts, or equipment furnished in connection therewith. What does that mean? What it means is the policy is not providing coverage for you having to repair your own bad work. So when you get sued for that, you're going to be on the hook for providing the legal fees to hire counsel to defend that claim, and ultimately for making those repairs, subject to a couple of things that we'll talk about and Chris alluded to. You can have contractual indemnification and other risk management language in your contract to help put the risk on the party that's ultimately responsible. That's great if you're an owner or a GC with someone downstream that's ultimately responsible for that. But if you're a bottom tier sub, the buck's going to stop with you. And so insurance is going to be very important, but as is making sure you've got the right people in place, because if they're doing a bad job, they're potentially going to hurt someone or cause property damage that could be covered. But in many cases, they're going to be doing something that needs to be repaired and won't be covered by insurance. CGL policies are not going to provide coverage, like I said, for if you do bad work on a piece of property, a building, and it needs to be fixed. But if you're putting up siding on the building and the siding falls down and causes damage to an adjacent car or someone not working for you, that's the kind of thing that we'd expect a CGL policy to step in and provide coverage for. Now, while there's the your work exclusion, there's an exception to the your work exclusion that applies to work performed by subcontractors, the subcontractor exclusion. The caveat to that typically reads like this in a policy. This exclusion, meaning the your work exclusion, does not apply if the damaged work or the work out of which the damage arises was performed performed on your behalf by a subcontractor. So if you're a GC, and if you get sued because of the work that's part of your scope was done defectively or was damaged, and there may be your work exclusion that prohibits or precludes you from getting insurance for that claim, there may be an exception that allows you to get it if your sub was responsible for performing that work. Now, interestingly, what's a subcontractor? There are many cases that look at that issue and how that is defined and who's considered a subcontractor. Again, you want to look at the policy in the definition section to see who is defined as a subcontractor. There are many cases that sort of look at the different levels of subs, but there's a difference between somebody performing work on site and a material supplier that's off-site. There's also cases that say if that material supplier was fabricating or doing any work on site, they may be a subcontractor that would trigger the exception to the your work exclusion. It all comes down to the language. So you want to be looking at that language, you want to be discussing it with your insurance agent, but you want to be aware of these particular exclusions if a claim pops up. Another exclusion that we see with some frequency, and I alluded to earlier, is the designated states or designated work exclusion. Insurance providers are looking for ways to limit their exposure. Insureds are looking for ways to decrease the costs of the premium. One of the ways that both of these things have come together is by having more and more exclusions that take away coverage, that mitigate the risk or take it away for the insurer. And as an insured, as a policyholder, you may like that. It may save you on the premium. But if you're not aware of these exclusions, you could be buying what you believe to be a good deal on a policy, only to find out that it has major holes in it of which you're not aware and didn't use risk management to address those holes in the first place. One of those would be the designated states exclusion. We've had folks that aren't aware of the fact that their policy may not apply to other states. You see frequently a New York State exclusion. Part of that is driven by the statutory language, some of the local rules in New York that make it a particularly unfriendly place both for contractors and their insurers. So oftentimes insurers will exclude coverage if you're doing work in New York. It becomes a problem for some of the folks that we represent where we're a Massachusetts-based firm that has clients that are working throughout New England. We want to make sure that you're looking at the policy to see none of the other states that you're working in, even if it's once in a while, are excluded. That's the kind of exclusion that I'd want you to go to the agent, push back on, and potentially pay a higher premium, because all it takes is one accident in another state where there's not coverage and you're in trouble. Another exclusion we see with some frequency is the residential exclusion. If you're a contractor that's doing any type of work and the habitational is a word they use, or residential construction field, whether it's condos, apartments, residentials, homes, as you'd expect. But things like tract housing, hotels, dorms, assisted living facilities. If you're doing work on those types of projects, you really want to be looking for this residential exclusion, which may limit or carve out coverage in some way, either a dollar amount or entirely, for work that's being done on residential projects or habitational projects. Why is that? What the industry has found is that there tends to be a higher rate and larger amount of exposure for residential projects, homeowners and the end users of those projects, as opposed to commercial buildings, office buildings, other types of commercial entities. The residential property owners tend to be more likely to sue, and those claims tend to be bigger. And so you see this residential exclusion. Take a look at it. It isn't necessarily a bad thing. It could save you money, but if you're not aware of it, and especially if you're doing residential work, you have to make sure that that exclusion is not there, or you could find yourself thinking you otherwise are covered by a CGL policy, only to find out that it's excluded because you're involved in residential work. Exclusion I've seen recently, the earth movement or subsidence exclusion. It applies to claims that have anything to do with earth movement. So landslides, mud flow, earth sinking, earth rising, earth shifting. These are things that could be excluded. If you're a general contractor, of course, a site development or excavator, that's an exclusion you're going to want to look for. But if you're providing services, underground utilities, any type of sub that may have an opportunity to do something that could cause the earth to shift and potentially cause a claim. You can imagine how devastating personal injury claims are involving that type of situation. You got to make sure that that exclusion is not there. I'd be very careful and look for that. A big exclusion that I think just surprises folks that buy a CGL policy, thinking it's going to protect them in the event that a subcontractor's employee is injured, is the subcontractor exclusion, or the injury to independent contractors. You know that you have workers' comp to protect your people in the event that they're injured on a job site. But if you have a CGL policy thinking it will provide coverage in the event that a sub's employee is injured, you want to be looking for this exclusion. Typically, the policy will respond to those types of injuries, but there are exclusions that preclude and take away coverage for injuries to subs and their employees. These exclusions have all different types of language, but look for the endorsement or some sort of exclusion that takes away coverage for injuries to subs, and push back on that, discuss it with your agent, or, as I'll talk about in a moment, use your contract with the sub downstream to be able to mitigate that risk. There are ways that you can assign that risk through contract to the sub, but it's very important, if you have that exclusion, that you have the strong contractual language that transfers the risk. That dovetails with another exclusion that's a bit of a catch-all, and I think is important, is a subcontractor special conditions endorsement. A lot of what I'm talking about in terms of the exclusions, you'll find in surplus or excess lines when you go to your insurance agent and maybe you've had losses, maybe you've had some sort of an issue with claims in which you can't get an admitted carrier to issue a CGL policy. Your broker may then have to go outside of the admitted market and get a surplus or an excess lines carrier. It may be someone from another state, but these policies tend to be a little wonkier, have more of these exclusions. If you're in that situation in particular, then you want to be looking for not only these exclusions, but this special conditions endorsement. What it is that you've got a carrier that is requiring you as a GC or as a sub working with folks downstream to take certain mitigation efforts to ensure that the person working for you, that their insurance is appropriate and that would step up in the situation. Why do we have that? Well, your carrier who's trying to save money wants to make sure that you've done everything that it thinks is reasonable to push that risk downstream. You can do that through contract. You can do that through being named as an additional insured. And so a lot of these excess or surplus lines carriers, starting right with the application itself, are going to be asking whether you've done certain things like had a hold harmless agreement drafted and executed by the sub, whether you've been named as an additional insured on the sub's policy. So you're going to be filling out an application under the pains and penalties of perjury, representing that you're doing these things, that you're taking these risk mitigation efforts with regard to subs. Those things are going to include having certificates of insurance that are regularly issued and which provide for certain coverage limits. So typically you'll see language such that the sub's certificate of insurance has to represent that its CGL policy provides limits equal to or greater than the limits that you have on your CGL policy. So typically 1 million per occurrence, 2 million per aggregate, as Chris mentioned earlier. But they require you to do these things and obtain the certificates of insurance from your subs. You could see that there would be language in your policy that requires that your subcontractor's certificate of insurance specifically states that the sub has a rating by AM Best, an insurance rating entity that has a certain rating for the type of insurance. So it's not just that they have insurance, but that your subs have a certain caliber of insurance. As I said earlier, you could have language in your policy in the form of this endorsement that requires you to have hold harmless or indemnification agreements with specific language that you may be obligated to force onto your subcontractor as a condition of you having insurance. It's not only good practice to do these things, I think, generally, but when you're looking at the policies that have these sorts of endorsements, you're contractually obligated to your insurance carrier to, in fact, take these risk mitigation efforts with regard to your relationships with subs and their contract. So these are heavy duty requirements that you have to pay attention to, because if you don't do them, it could be a basis for your carrier in the event there's a claim and you put in for coverage, for them to deny coverage, saying you didn't comply with this endorsement that requires you to take these extra steps. Additionally, if you're saying in the application, when you're filling it out and submitting it to the carrier, that you've done these things, that you've checked the box saying, sure, I have a hold harmless agreement with my subs. Yes, I require them to provide certificates of insurance. And you were ultimately found, once there's been a suit, to have not done those things. So suit gets filed against you, you put in a claim with your CGL carrier. CGL carrier starts poking around and saying, well, show me that you did the things that you represented you would do in the application. And if you don't do those things, your carrier could take the position that it's denying coverage on the basis that you misrepresented to the carrier in the application. So starting with the application, pay attention to what you're representing to the carrier that you will do, and then understand there are these endorsements that could require you and pull back coverage in the form of the exclusion if you don't do it. This isn't an exhaustive list of these exclusions. There's some of the key ones that we see that we want you to pay attention to. The takeaway with the exclusions, and I think broadly, is have a good agent, work with your insurance agent the way that you work with your legal team. You want to be reviewing the policy, have the agent understand the types of activities that you're engaged with so that they can understand what potential exclusions they need to be looking out for, amounts of coverage and what you're looking for in terms of protecting you. Ultimately, it's a business decision that you have to make in terms of your risk, in terms of how much money you want to spend on premium, but having a good experienced agent that's familiar with construction and the ins and outs and these ever-changing exclusions is a great idea. Read your policy and ask questions. As I said, there is at least one case in Massachusetts that indicates you have a duty to read. It's really important that you do that. But work with your lawyers and your agents in conjunction. The contract and the policy, it's a belt and suspenders approach. It's the best way for you to mitigate risk and be prepared in the event of a claim.
Thanks, Nate. And one more note on transferring your risk. If you're doing everything right and your subcontract says that you'll be an additional insured, and you get the additional insured endorsement, it confirms you are an additional insured, your work is not finished. Because in that scenario, you have your $1 million policy and the subcontractor's $1 million policy. You want to make sure that those add up to $2 million of coverage for you. What I mean by that is, back to that language of primary and non-contributing, you want to be sure that the subcontractor's policy in the other insurance provision says sub's policy is primary, and that in your insurance policy under the other insurance provision, it says your policy is excess to any other insurance policy on which you're an additional insured. The latter provides you with $2 million of coverage. The former provides you with $1 million of coverage. That'll be split equally on a pro rata basis. So again, you want to make sure that looking at these two other insured provisions in the respective policies, they fit hand in glove as to yours being excess, subs being primary. If they both purport to be excess and there's no primary, the law says those are mutually repugnant conditions and they revert down to pro rata. So it's the difference between $2 million and $1 million in insurance. Just do your homework. And if you have questions, please call us because we'll be happy to help you. It's been a pleasure talking with you this morning. This is part of our construction risk series. We hold it on the third Thursday of every month, and we look forward to seeing you next month. Thank you.
Thanks.